going to take a quick look at Joy Global and look at the current price levels. And Joy's a good, if you're new to technical analysis, new to trading, it's a great example of the power of trend and illustrating the point that we never guess the bottom of a stock. It's been a rough year for Joy. Let's take a look. So as we look at Joy, clear back here in about a little over a year ago from the time this video was made, a nice little support level formed. Had a nice little support level here at about $58. And as we know from those who trade, anytime a support level breaks, which it did just about in this vicinity here, we see price breaks. We know that this is a very bearish signal. We know that this is an instance where traders pull out their bearish playbook. They find the appropriate trade for their trading style. And because if support breaks, we expect price to go down, which is what occurred. Now, what happens to a lot of new investors is they start to guess where the bottom might be. Well, it goes down. It's a bargain, right? Well, those who trade don't care about that. They know that the momentum that's created, the negativity behind it, they don't really care what the reasons are either. It could be pure emotion. It could be fundamentals that are just out of whack. They don't care. They understand that when support breaks, when this price level breaks, that the potential, the probability that it will continue to go down is heightened. And this is what has happened with Joy. And the great thing about Joy, it's a great illustration of this principle of support breaking, because we look here, a couple months later, it was at 58, comes down to 48, a new price level breaks. Let's just draw another little arrow there to show that the support zone that formed, there, it broke, comes up, test it as resistance. These heavily traded U.S. stocks are pretty crazy as how well they adhere to technical analysis. So support level formed, fell through, tested that old support level became new resistance, continued its slide, and then we had a massive support level form. A multi-month support level formed, and you might have guessed, well, that's the bottom, right? I want to just bear with me as I draw some arrows here. Can you see it? Can you see the support level that formed during this multi-month period? This was an extremely strong support level. We have multiple tests here. We have multiple tests there where it just basically lived its floor. The bottom, whatever, if you're new to this concept, support is the price level where we expect price to stop falling, where it gains support, where it's almost artificially kept up at this level. So this very nice support level formed. You might have guessed during this time period a couple months ago that it was the bottom, but then we have a break of that. And this breakdown of this support level was particularly strong because the stronger the support level, if it breaks, oftentimes what follows is dramatic movement. So just draw a little arrow here. Show you where it broke down there, and then look what has followed since. So the power of a downtrend. We don't try to guess when the bottom of a stock will occur. If you do that, then you shouldn't trade, to be perfectly frank. That might be a fine investing philosophy, trying to find bargains, trying to find long-term investments on stocks that you think are emotionally driven down, news events driven down. But for traders, for those trying to adhere to technical analysis and find good short-term and intermediate setups, we don't guess the bottom of a stock. Enjoy is a perfect illustration of that. So as we create this video, a very short-term support level after a dramatic slide over the last couple of months, and quite a slide over the last year, might be forming at $18. We only have a couple days of data to determine that, but as this pattern continues to develop, we'll update it for you.